Hey everybody, thanks so much for joining us tonight. It's Mario with WRX Property Group and my business partner George Dmitrovic. And we're going to be talking about real estate and COVID-19. We had a show last Monday and we have a new one this Monday just because some things have changed in the market. We have more clarity on what's going on with the situation and we're going to talk about the details. Hopefully everybody's doing well, and thank you so much for joining us again. I see we have 14 people with us right now live. Thank you, everybody. Before we get started, I just want to take a few minutes and thank all our first responders, our doctors, our paramedics, our nurses. I know they're going through a lot right now and doing so much to keep us safe. And thank you guys so much. Of course, our security guards, our police officers, our transportation people, the media folks, the internet providers. Thank you all for being there for us and working so hard to keep us updated and informed. Hope everybody's having a good night. Our numbers are growing. I'm really proud to say we're at 18 right now. What's up, everybody? And our itinerary for tonight is going to be we're going to have our lawyer partner guest here tonight, Heidi Popovic from Reinhart-Popovic Law firm. She's going to answer some questions about different things with COVID and real estate and what we can expect, how to prepare, etc. Then we're going to have our mortgage broker, Leo Saleh from Northwood Mortgages. He's going to join us again and just give us a little more clarity on what's happening in the mortgage industry as far as COVID-19 and real estate. And then George is going to touch on a little bit about the market, what has changed and how things are different now compared to last week. And then we're going to have some Q&A. Thank you so much again for joining us. I'm pretty sure everybody's following what's happening in the region as far as cases. But if you missed it, I think we're up to 103 cases locally. So it seems like the health report that came out this morning from the health minister that I listened to on the radio, she was saying that we are probably going to be a couple of weeks away, at least till we peak. So we're in the beginning of the trajectory right now, and hopefully things go faster than they predict and we can just get through this. All right, well, thanks again. And again, my name is Mario, my business partner, George. George, take it.
Hey, everyone. How's it going? Hope you're all staying at home, staying safe, staying inside as much as possible, and doing things to pass the time, keeping the routines and everything. So we're gonna have Heidi Popovic join us from Reinhart Law. Heidi is our trusted real estate lawyer, but their law firm also does a few other things. So if you're interested in checking them out, I would visit lawrp.ca. You can read about them, you can see all the services they provide, and also get the contact information. So, without any further ado, I would like to invite Heidi on the call. Hey Heidi, how's it going?
I'm good, how are you all?
We're doing well.
Hi, Heidi.
Hi, nice to meet everyone virtually, and thanks for having me. We're all trying to navigate our way through this unprecedented situation, so hopefully this is as useful to you as it is to me. Although I'm the one answering questions, I'm always interested to hear the perspective of buyers and sellers and their concerns in this situation before your agreements are signed and before they reach my table even. So as Mario and George pointed out, just by way of background, I'm a real estate lawyer at a boutique firm here in Kitchener. I moved a few years ago from Toronto where I practiced litigation, so it's the background that I approach real estate as well. In such an influenced and changing market, I think it's important that potential buyers and sellers really understand their rights and obligations and see how firms such as ours are trying to accommodate the situation and ensure transactions continue to close despite this craziness out there. I'm one of the lucky ones in this situation when it comes to employment. I always joke with my husband that apparently my job is essential and therefore I get to continue to work while he's at home for 2 weeks. My staff and I continue to work regular hours, and although our office has eliminated in-person meetings other than real estate appointments, you'd be surprised how much can be accomplished by phone. So we'll see how much longer this continues, and hopefully I can answer your questions.
Awesome, Heidi. What a brilliant introduction. Thank you so much for joining us again, Heidi. Okay, so some of the questions that have come up over the last couple of days or weeks since this pandemic started is, for example, one of the things people are asking is, what has the Law Society done to protect consumers right now? Has anything been sent your way? Have instructions been sent?
Well, to be honest with you, it looks like the situation's changing from day to day as the situation continues to increase and intensify. The Law Society, who's been known for their strict regulations, especially of lawyers as myself, have actually exercised leniency in their requirements and even their requirement to meet with clients physically. So I always envied realtors and brokers for being allowed to use DocuSign, for example. We as lawyers are still unable to use this because partially we have to verify and identify who our clients are. Luckily, during this situation, the COVID-19 pandemic, the Law Society has, like I said, shown leniency, and they're now allowing us to identify our clients by video conferencing. So my office, although we continue to operate in person for those clients who want to close their transactions remotely, we email and scan these documents, the closing documents, to the clients. We video conference, and I explain all these documents to them over programs such as Skype. And they sign. The important part is that the current camera has to be on the signature as they're signing, so that counts as me commissioning a document. And we go from there. They sign it, they courier it, mail it back to me. I do still need original signatures, unfortunately. But then it's business as usual from there. We're registering documents online through the land registry system as before. So not much has changed other than that. If it's any consolation to potential buyers, sellers, even realtors out there, the only two things that I could see changing that would affect our ability to close these transactions is if the banks stop funding mortgages. That's completely out of our control, and the land registry system closes. I've been following the news on a daily basis, and neither of these things appear to be a reality or even mentioned. So I think we're good for now. Keep buying.
Awesome. So what's really cool, Heidi, like what you just explained there is, so like basically you do video conferencing. So you send me the document, I download it, I print them, then I point my camera while I call you so you can witness me sign it, and then I put all that together and bring it to your office.
You can drop it off, you can mail it. We, us lawyers, we use couriers as well. So there's ways around it. Yes, I still have to witness you, so see you sign your documents.
Cool. Awesome. That's great. So a lot of people didn't know. There was a little bit of ambiguity in that so that's how you witness it. That makes sense. Cool. Okay. George, do you have a question for Heidi?
Yeah. So we've all heard in the news when Premier Ford announced that renters don't have to pay their rent if they can't. They're not going to get evicted. So I've been getting a lot of questions from both investors who have tenants and they're concerned about them potentially not paying, as well as tenants wondering what their rights are, and if they can't afford to pay it and they're not evicted right now, are they going to be evicted afterwards?
Mm-hmm. Well, we know by now, or we may know, that no eviction orders are being issued, and the sheriff's office is not enforcing any eviction orders until further notice. That's actually on the government's website as well. So all eviction hearings as well are suspended. The only exceptions for this are for serious safety concerns and illegal acts. So if you don't fall within one of those exceptions, you're safe for now. This doesn't mean, though, that you're off the hook for rent. Tenants are still required to pay rent while the eviction order is not being enforced. That said, during this pandemic, landlords can still give eviction notices. But again, the government is not encouraging this, and they're encouraging, there's this overriding principle of direct landlord-tenant agreements and arrangements to be made, such as rent deferrals. I've heard of those in the past week. So if you're a landlord and wish to give an eviction notice, although the landlord-tenant board service counters are closed and most of their staff is working remotely, you can still file your applications online. But then you ask, practically speaking, what's the point of it? It won't be enforced, and you're absolutely right, until further notice. I was asked actually today a follow-up question on this point. Can my landlord change my locks on me? And the answer is plain and simple, no, even for non-payment of rent. I shouldn't be saying this, but I'm not encouraging anyone to withhold rent or take exceptional measures. But it is clear that the government is encouraging, like I said, these arrangements to be made to get us through this situation. In theory, the government has even offered assistance to landlords by deferring mortgage payments. From experience, I mean, I don't know how helpful it is at this point because everyone seems to be overwhelmed by the situation. And I mean, just today, it's one person at the bank at a time. So I'm not sure, practically speaking, how doable it is. But in theory, it's there.
Awesome. Thank you. Thank you for answering that.
Yeah.
Okay, so pay your rent, folks. Pay your rent. You're going to get evicted. If you get evicted, it won't be right away. It's going to be after the tenancy board opens, and then you're going to be in arrears and rent, and you're going to have to pay it anyway.
Or
if you can.
Arrange some sort of agreement with them, see if you can defer your rent, or maybe you can pay half or something.
Anything's better than nothing.
100%. Yeah, cool. Okay, so next question I have for you, Heidi, it's actually very specific here. And I just want to say a lot more people have joined. I just want to say thank you for joining us again tonight. We're just in the middle of talking with Heidi Popovic from Reinhart-Popovic Law Firm. She's just answering some specific real estate related questions for us and our clients to better help us understand the situation here that we're in. So the next question I have here, Heidi, is what happens, very specific, what happens if I get COVID-19 and I need to self-isolate, but my closing date is within the 14 days and I can't move, right? I need to self-isolate. I can't close on the property. What are we going to do?
Wow, what a question. Who would ever think of this? Well, unfortunately, as with many other legal issues, there's no black and white answer. So I'll do my best to provide an unlawyerly answer for you.
Thank you.
In short, we are all subject to the Human Rights Code. So when we act in different capacities, be that as landlords owing the tenant a duty to accommodate their disabilities, and even parties to an agreement of purchase and sale, like your example. So if we arrange for an in-person showing of a unit where, for example, a tenant suffers an immune compromising condition that ultimately could lead to a complaint under the Human Rights Code. Obviously, whether such a complaint would be successful would depend on the circumstances, so including the urgency of the request and if any other options were available to the parties in that situation. So in short, it's a really hard question to answer. Sorry for
That's okay.
But in the context of a showing, I'm urging clients and their parties with their agents to make arrangements for showings in advance at this point, ideally before even the agreement is entered into. Allow for flexibility, but also adhere to the guidelines for social distancing. If you're curious to see the place, it's better you stay home. If you've already signed the agreement and you need to make sure some issues have been rectified, then ask for pictures, video clips, a report even from the lawyer confirming that the issue has been rectified, the repair has been made. I've seen a lot of agreements of purchase and sale where they have the standard clauses allowing for 2 viewings prior to closing. Get those out of there if you're concerned about the situation at this point. There's no reason for them. Unless, again, you have some repairs or outstanding issues that have to be dealt with prior to closing.
Right.
And I, as a lawyer, I'd always rather know of these issues beforehand. It's much easier for a lawyer to send a letter to the other side explaining the situation than have agents and their parties dispute these things beforehand. So If you're concerned about something like that, talk to your lawyer even about holding back part of the purchase price until you're satisfied and can sleep at night buying this property.
Right. Makes sense. Awesome. Thank you, Heidi. And what about force majeure? What are we going to do with that? Like acts of God. Is this, I sold my house or I bought a house, now I'm selling my house, and now this pandemic, can I get out of this contract because force majeure? And explain that, what that means. Thanks.
So I don't know if you watch too many movies, articles, media. I'm hearing this phrase thrown around quite a bit often now. Basically, can I get out of my agreement? I don't want to carry a mortgage anymore. But it's funny, force majeure is a concept that applies most often to commercial contracts, and it allows parties to be excused from their contractual obligations. And we're able to invoke this provision in the event of serious unforeseen circumstances. So these are events that are out of the control of either party and unforeseeable. So there's really three things you have to invoke, just little law one-on-one at this point. Three things you have to prove, in order to be able to use force majeure. And you'll find that, no, you can't use it. It doesn't apply to agreements of purchase and sale.
Okay, in the real estate. It does not apply. You cannot say act of God to get out of this. No way.
No.
Thank you.
You're not an insurance company. The first qualification is that, okay, COVID-19 has to qualify as a force majeure event. So yes, it does. It's been defined as a pandemic. Fine, we've ticked off the first. The second thing you have to show is COVID-19 sufficiently impacted your performance. Basically, the courts have said it has to make it essentially impossible for you to perform your contract. That's very hard that's a high threshold to meet. So most people fall off right there. And then lastly, you have to show there's a connection between COVID-19 and your failure to perform the contract. So if you're purchasing a property, for example, what is it about this pandemic that makes it impossible for you to go ahead with this purchase? Ask yourself that. If suddenly you can't meet with your bank to arrange a mortgage because all banks are permanently closed and they won't fund your mortgage and there's no other financing options available, then you might be able to invoke force majeure. That's not the case today, though, and hopefully we don't go there yet. But if you want out just because you don't want the risk of carrying on a mortgage, and even job stability at this point is a question, that does not trigger the force majeure clause. Just because something's more expensive or unprofitable for you does not entitle you to renege on your contract.
Okay.
I want to say, given the circumstances, you can do your best to try. Again, it's not a black and white answer, but these are all things that you can address in your agreement of purchase and sale. Have your completion date out there, and then in your schedule indicate that both parties are agreeing to a flexible closing within 3-4 days of the agreed upon date. To take into account the closure of businesses and procedural bank issues, for example. Back on the force majeure thing, I mean, if this is really a concern for people, if you want this property and you don't know if you can go ahead with the purchase a month from now, try and include a force majeure clause in your agreement. These agreements are meant to be negotiated. They look like standard boilerplate Maria forms, but that's the whole beauty of the schedule. Put something in there that will help you sleep at night. Draft them in a way that protects you. So to many of my clients buying, I also recommend including a condition that allows the buyer to obtain a property insurance policy or even quote before finalizing the agreement. As you may or may not know, the insurance industry is known for being able to increase their rates tremendously, even overnight. So if people are concerned about COVID, they should also be concerned about insurance and whether they'll be able to get those binder letters in time for closing, for example.
Okay, good to know. So I've just been told that my question wasn't heard because I had my microphone muted. So what Heidi was answering to was whether you can use COVID-19 as a reason to delay your closing. So that's what that answer was for.
And the answer was
awesome.
yes.
Thank you.
Yes, you can try.
Great, thank you. Perfect. So another thing we wanted to ask was, so then tell me a little bit about proceeds, Heidi. I mean, look, we don't have to meet in person. I drop off my documents or I courier them to you. Are you going to courier the money to me, or are you going to, what's the best way to do with the proceeds from the sale?
I can't speak for other firms, but my firm will direct deposit the proceeds to your account if you are banking with one of the 5 major banks.
That's fantastic.
Yeah. If you don't, we'll make arrangements. I mean, like I said before, we rely heavily on couriers, so that would probably be the next best thing.
Excellent. Thank you. Thank you, Heidi. And then I think, George, do you have another question?
Yeah, I wanted to ask, you've touched on it a few times, having these clauses to help people sleep at night when they make purchases during the situation. Do you have any examples of clauses that you would recommend for people to include?
Sure. So I've seen a few over the past few days or weeks at this point. They say it's very important, and they say a lawyer's best friend is a good realtor. So times are changing and your agreements should too. If your realtors are doing their job at the beginning, it makes my life a lot easier at the end trying to close your deal. I've seen some really good provisions used at WRX Property Group's agreements. You've already mentioned flexible closing dates. We've talked about consent to postpone the closing date if a quarantine is required. There's something called title insurance gap coverage. This allows for closings in escrow. So really, we can actually release keys and transfer funds on a closing without actually registering title.
What?
Yes. So, and we're insured for that.
Fantastic. That's great. So what does that mean? Explain. Thank you.
Yeah. So that basically means it's technically an escrow closing. It means both parties are ready, willing, and able to close. Obviously, due to these circumstances, that might not be possible procedurally speaking. Our friends, the title insurers, for a nice fee will insure these transactions even if you don't register the transfer of deed or title, provided that all the documents are signed and agreements in place until, for example, the land registry opens. So if they say, let's hope they don't, but if they say in 2 weeks that land registry is closed for 2 weeks and you have a closing, then we may still be able to close your deal. You won't have a deed until the registry office is open again, though. Okay. So it's just a way around this.
That's great. That's great to know.
Yeah.
I don't think a lot of people knew that this existed.
Yeah, we use it for long weekends too, for some reason. When people close on a Friday and realize we're not open on the Monday.
Right.
But George, you did ask me about some other conditions I would put or wording in an agreement of purchase and sale given the circumstances now. I'd also add to this list tips for buyers and sellers. I wouldn't recommend in this market buying and selling in the same day. If we're talking about extensions or postponing closings, then talk to your banks about bridge financing beforehand. You might want to also, my clerk actually gave this idea, made this point to me today, so kudos to her. Discuss with your bank the requirements for employment. If you're worried that you might be out of a job in 2 weeks, and as we all know, our mortgage depends on employment for underwriting purposes, discuss with your bank to see, are they still going to fund your mortgage on the day of closing? Ask it, obviously, it's a fine line to ask, question to ask. You don't want the bank to get cold feet. but I never recommend that people rely on these pre-approvals. So add those conditions back in on financing to your agreements. I know it was a hot market up until about 2 weeks ago. I really think those conditions should still continue to be in these agreements. Like I mentioned before, take out the clauses on further viewings. If someone wants your property, they don't need to go see it 2 or 3 more times, I don't think. What else was there? We talked about title insurance, property insurance. Get at least a quote so you know what you're walking into. And again, if you want to rely on force majeure, include it in your agreement and define what force majeure is. Specifically say COVID-19 counts as an unforeseeable circumstance and event.
Awesome.
Yeah, that's great.
Heidi, thank you so much. Thank you so much for answering these tough questions like this. Thank you for being so flexible. Thanks most of all for joining us tonight.
Thanks for having me.
This was Heidi with Reinhart-Popovic real estate firm out of Kitchener. Heidi is fantastic. Thank you so much for joining us.
Thank you. Best of luck to you too.
Thanks.
Good night,
Cheers.
everyone.
Bye-bye.
Bye-bye.
So for any of you
guys, if you have any questions for Heidi, in the meantime, please either let us know here on our Facebook group or email us the questions, and we'll definitely pass them along to Heidi and to make sure those are answered for you. So please don't hesitate. There's no crazy questions. Just let us know what's on your mind, and we'll go from there.
Fantastic.
Thanks.
Thanks so much. Okay. All right. Well, back to just the two of us.
Hey, George. So now it's Leo's turn, right?
That's right. Now it's Leo's turn. So we got to give Leo a ring and see what's going on.
Son. Sorry, guys. That's my kids in the background. They're not asleep yet. They're screaming, "Mama, mama." Sorry about that. Okay, here we go. Mr. Leo Saleh from Northwood Mortgages.
All right.
What's going on, guys?
Hey, Leo. How's it going, man?
Hey, Leo.
Good. How are you?
Good. Good to see you again.
Good to see you too. I was listening to that great lawyer, and I was doing some work in the same time. So.
Okay, fantastic. So, how do you feel about her point about making sure your bank's going to finance you in case you lose your job, and including those conditions and the offers given the situation?
Well, we got few updates about that from few lenders. It's pretty much the same. So for insured mortgages, which is, if anybody who doesn't know, insured mortgages, if you paid less than 20%, so you have to get a default insurance. That's called insured mortgage. For those, if you got approved by March 25th, then you got laid off for some reason, but you've been approved by March 25th, and you entered into a legal binding purchase, and the closing date is before September 30th, 2020, they still can proceed and work with you.
Okay, fantastic. So
if it's not insured, if you have like a return date, let's say it's closed for a month or so, and the work say like we're hoping to open in a month or so, they still work with you. But that was for anything was in the pipe already. Now, any new applications, it's gonna be treated normally. So right now, do not apply for a mortgage if you're not confident about your job. Basically, that's what they're saying.
Okay, sounds good. So I know last time that we spoke, you said there's certain lenders who might not necessarily give a call to your employer right before closing to make sure you're still working. Have those guys changed their policies as well?
No, nothing we heard of yet.
Okay.
Yeah, nothing we heard of.
They probably can't keep up with all the deferrals and all the questions that people have about processes to have the time to call employers back and then check.
A huge number for calls and emails for the deferrals and people. You're trying to help them, and lenders, they start acting better this week than last week. Some created their own websites directed for just that. So we start sending those to the clients. Just go to that website. I still advise the clients not to take it if they don't have to.
Okay.
It's not a good idea, especially the credit bureau part is not clear. Equifax is still hoping it's not going to affect it, but they're not sure because the reporting system is automated. So if somebody skipped the payment or deferred, it's in the system might shows as missed, and then get reported automatically to Equifax as missed, and then it affects your credit. We're hoping that's going to be avoided. Equifax is working with the lenders and the government, but things like that, they're not like that. They take time.
Right, these are systems and everything.
Yeah.
Hey, Leo, some juicy stuff. What are the rates like?
The rates. Anybody who has variable already, like variable from last year or some, and you have some, and you know some of those clients, common client between us, they are laughing right now because it dropped just another 0.5% on Friday. So starting in April, the rate for them, some of them will be around 1.5%.
Wow, so that's less than inflation. So you're basically getting free money.
It's really good for people who already have it, right? Now, for people who are getting into the market, variable are not offered at the same discount anymore. So most of them offer variable plus, so prime plus. So the prime is going to be 245 plus 20 basis points or so. So it'll be like 2.65 or something, which is still very good rates, but you're not getting the same discount as the others. Now the fixed rate is start going up.
Okay.
The fixed rates are going up. The bond market is up, and also there's potential liquidity issue from the lenders and investors. Not all lenders have the same source of money. Some from balance sheets, some from investors, and not all investors comfortable with putting low interest in this market. So some lenders start increasing the rates to basically take it or leave it. That's what's available, and that's what they're doing.
Okay, so basically what happened was they tried to drop the rates to encourage consumers to keep borrowing money and lending and keep the economy going, but then the lenders felt the rates were too low for the amount of risk.
So the government idea is not to encourage new people to take. It's more like help people who already have line of credits or whatever, not especially businesses, to be able to manage their debt and pay less interest.
Mm-hmm.
That is really the main purpose of the point here.
Okay, I see. So it's not so much for new people or to encourage anybody to run out and buy a house right now.
No. It's they're trying, like what everybody's trying is maintain the market as is and reduce the damage as much as possible. Versus like encouragement to go and buy, because the real estate was crazy market already as is before the COVID-19, and now kind of cooled down by COVID-19, and nobody wanted to hit it up right away. So no, there is no encouragement for new buyers.
Okay, fantastic. Do you have any other news that we might not have touched on that you think is important for people to know right now?
Yeah, same stuff like last week, especially the deferral. As I said, if you can avoid it. Do not take it. It's something that's going to cost you more in the long run.
Okay, fantastic. Mario, do you have some questions?
No, I think we're good. We know what the rates are right now. We know about the deferrals. We know that. So, Leo, question. Boom. Mm-hmm. What about refinancing? Now, have you seen, you as a mortgage broker, have you seen many people refinance recently? Have you seen a spike in that? Or would you say it's about equal to
I would say before? a little bit more, and we're expecting more of it for multiple reasons. Obviously, the usual reason people want to pay off their current debt, line of credits, credit cards, and all of that. But the other two reasons now are preparing for the next few months. Some people don't know how it's going to be. So, you know what? I don't even know if I'm going to have a job in 6 months to qualify. So might as well do it now and get the equity out just in case. And some actually to invest in the market. The stock market dropped a lot, as we all know. And a lot of investors look at this as a good opportunity to invest. So they're getting some.
It's a bull trap. It hasn't bottomed out, Leo. Hasn't bottomed out yet. It's a bull trap.
It's not bottom, but it's almost 50% of what I used to be a few months ago. right? So it's still a good time to buy. So a lot of people want to talk. I was talking to somebody on that on Friday, and want to get a big chunk out to put in the market for a couple of years because he knows he can probably potentially double his money.
Yeah, 100%.
That's not bad at all.
Cool.
Yeah, it's like the idea. People who did that in 2008, they're looking at this. You'll be like, yes, it's the same opportunity for people who have the money. It's everybody's different circumstances. Obviously, there's always unfortunately winners and losers in the initial situations like that.
Right. Now, how about home equity lines of credit? How do you feel about those, and do you think those are advantageous? What are their pros and cons?
They are depends on your personality, I would say. So if the client is good with their money and they manage their debt usually good, and they want to have that just in case or for an investment purposes or something like that, yeah, absolutely, they're a good product to have there. If the client has a spending personality and we see like a lot of debt issues in the past in the credit, and you think it's like a habit and most likely it's going to happen again, probably not a good idea because it's a really easy available money. And if you have that spending money, like the spending habits you cannot control, it will be racked up to the max in a matter of a year or two, and I've seen it.
Okay, that's good to know. So be careful with those lines of credit.
Yeah, they're a fantastic product if you know yourself and you're good with your money. If you have spending issues, no.
Okay, good to know.
Awesome, Leo. Thank you for joining us. Anything else, George?
No, I think that's it for me. Leo, do you have any final remarks before we boot you out of this call?
No, just everybody, please do the same thing as we said before. Stay home and keep your distance. This is really important. That the more people do this, the quicker we're gonna go over this hump and go back to normal. But if people still ignoring it and going out and mingling and visiting people and family and all, we're gonna be in this in much longer time.
Thanks so much, Leo. That's some great advice. So
Thank you.
second, we got one more question here before you sign off, Leo. What would you recommend to someone who buys rental and owns with equity more than 30% deposit with recent sale and stable employment?
So the question is does he want to reduce the payments?
We have to clarify the question, I think.
Yeah. Hey, Kay, can you clarify that question for us? And Tasha is asking, are you saying that variable is a good choice right now?
Variable, I always recommend variable for people who are comfortable with it. It's always a good product. It's been proven good for the last 30 years or so. The only thing is your comfort level with variable. Variable is like investing in the stock market. It goes up and down. So now it's going down, which is fantastic. Everybody happy about. In 2018, 2018 went about 3 times, right? And people start getting nervous about their variable. Should I lock in? Should I lock in? Should I lock in? And anybody locked in, then they're great right now because they locked in for increase of 0.75 and now dropped double that, right? So if you're comfortable with the ups and downs of it and you don't have the anxiety of like, oh, I need to know exactly how much is my payment every month, then variable is a very good option. And always have a better penalty, so I always recommend it. But if you have an anxiety with the payment and you want it to be exactly the same every month, stick with fixed.
Okay, sounds good. So let's see here. I'm just reading this question. So buy an owner-occupied unit and then buy a rental as well. Would you still approve it with stable employment and above equity? So they're saying, are they able to buy both properties right now if they have a good
if you qualify, yeah, absolutely. Nobody's stopping the purchase of investment properties. It's not a problem.
Okay. So if
they have a large, substantial down payment, I think that's what it says with the 50% down payment.
Yeah, it's whatever is the qualification is the key. So credit is good sometimes, and if employment is good and you have the exact like the income that you need to qualify to carry both, including the rental income, then yeah, by all means you can do.
So Leo,
no problem at all.
let's just do a quick little quick math, real quick. So if I wanted to buy something that's $1 million worth, $1 million, and I have zero debt, and my credit score is good, how much household income do I need with my wife? Because maybe this is going to help answer this guy's question. And I have 20, and assuming I have 20% down payment.
So it depends if you want authorization as well. If it's 25 or 30 years, that makes a difference.
Okay, let's call it 30 years.
Let's stick with the 25. That's the most common.
Okay.
It's almost 5 times your income.
Okay, so if I have 20% down, that's 200,000. So I need 800,000 in loans. So I need 5 times my income to approve that. So what is that? That's about 175,000.
And in that case, if you buy for about $1 million and you have the 20%, probably you can get away with a bit less because you're not paying the default insurance, and you can do the amortization for 30 years. So you're probably gonna need a less income with work. And also we have lenders who, it's not insured mortgage, if you're paying 20 or more, they don't have to do the stress test. They're regulated by the government of Ontario, not the federal government. So the rule of stress test does not really apply on them. So they have that product.
Perfect.
But it's available.
This answered the client's question, by the way.
Yeah, bingo, they said. So well done, Leo.
Awesome. Glad we were able to put that together. So that's excellent. Thank you, Leo. Thank you so much. Is there anything else?
An update for appraisals. You asked me about it last week, and it was a bit confusion. So now appraisers don't go inside the homes anymore, and all lenders now accept what they call a modified appraiser. So basically, the appraiser will go outside, take the pictures of the outside of the house. The owner or will take pictures of them inside and send it to them, and then they do the report based on that.
Can they use pictures from the listing, or do they need new pictures?
I saw one last week, and the pictures looked to me as they are from the listing, and it worked.
Okay.
So it was a property. Yeah, it was last week. I believe Tuesday it happened. Yeah, and when I looked at the pictures, they looked professional, like professional pictures. I believe they accepted the listing ones. Yeah.
Okay. Awesome.
Maybe the seller has a professional camera.
Yeah, maybe they're a real estate photographer.
Thanks for joining us, Leo Saleh with Northwood Mortgages. If you need any help with mortgages or have any questions, please comment below, reach out to us. We'll put you in touch with Leo. Thank you, Leo.
You're welcome. Have a great one. Stay safe.
Awesome.
Thanks.
Hey, folks, thanks again for joining us. It's been incredible so far with Heidi answering wonderful questions, with Leo hitting up some good questions as well. And now it's George and I. And again, thank you again for being here with us. But George is going to touch on the market with us. What's happening in the real estate market in Kitchener-Waterloo, Mr. George?
Hey, everyone. Thanks for joining in. Once again, George and Mario from WRX Property Group. We talked with Heidi earlier. We just had Leo on. If you guys have any questions that are specific to any of them, you can leave it in the comments or send us a message through our Facebook page, and we'll make sure that we connect you with them. Now, about the real estate market. So last week when we left off, it was still up in the air whether real estate was an essential service or not. So were we going to be allowed to keep working and selling homes? As I'm sure most of you know by now, it was listed as an essential service, but with a little asterisk beside it. And our board has sent us emails almost every day reminding us that even though we are an essential service, it doesn't necessarily mean business as usual. So they're strongly discouraging any face-to-face showings. They want us to do as much business as possible digitally. And then, if you really have to go show a property to someone, you should use your own discretion. Make sure that they haven't been in contact with someone who's sick, that they haven't traveled in the last 14 days or anything like that. The idea of real estate staying as an essential service was to help out everyone who was already in the process of a real estate transaction. So let's say they've already purchased a house and they need to close on it, or they've sold their property and now they have nowhere to live, so they need to find somewhere to live and a place to buy. But we're still being strongly encouraged to use digital forms as much as possible before heading in to see the properties, really narrowing down the list. The other questions we had was, how is this all going to affect the market? And for those of you that joined in last week, you remember we looked at the supply and demand graphs, and we were trying to kind of predict what would happen. We knew that demand would drop for properties, and we hypothesized that supply would drop as well, which would end up in the prices staying roughly where they are, maybe a little bit lower, maybe a little bit higher, kind of hard to say. But because we already had such low supply of properties, we hypothesized that this wouldn't have a big effect on the market in terms of prices. It would reduce the number of homes being sold, but it would not affect the prices that they're being sold at. Now, just a reminder, this is just our prediction. We don't have a crystal ball. We can't say for sure what's going to happen. This is just based on the numbers that we're seeing. Now that we're a week into, we're at the end of March and we're about a week into realtors really being restricted from showings, we can try and take a look at some numbers and see what's going on. So the screen that we've been sharing with you, these are stats for Kitchener-Waterloo from January 2019 to January 2020. The green line represents the active listings, or on average how many homes there were available for sale. And the blue lines, those represent the average sale price. I gotta look at the other graph. There's the average sale price. So you see the blue line's kind of been increasing, and then the green line in January 2019, it increases into the spring, just kind of how it always goes. Supply increases as we go into the spring and we get more buyers. And then we see that sharp drop in supply into January and February, which we've been talking about a lot, which has been driving the real estate prices and really pushing them up. For example, in January of 2019, we had 611 active listings. In January of 2020, we had 375. So almost half as many. When you look at February 2019, we had 680 active listings. And in February 2020, we had 400 active listings. So already you're seeing that there's just been such a drop in available listings before this pandemic happened. And if we're hypothesizing that there's going to be an even bigger drop in listings, it means that it can handle a big drop in demand as well. For example, if we look at the number of sales versus the number of active listings, in January of 2020, we had the 375 active listings. We had 239 sales. In February, we had an average of 400 active listings, and we had 427 sales. So we were selling more than what was actually coming on the market. And then when we look at March, we're sitting at 475 active listings, roughly. And there were 492 sales that happened in March, compared to March of 2019, where we had 753 active listings, so almost double, and we had only 466 sales. So we're not quite yet seeing the impacts of COVID-19 on the supply and on the demand, just because it really hit the real estate market in the last week. I would say, the first half of March, it was mostly business as usual, people taking some precautions. Third week into March, you saw more realtors taking it seriously. And then the fourth week, which just happened, is when the board really stepped in and started telling people to limit things and consider, delaying the listing if you don't have to sell right now, or delaying buying if you don't have to buy right now.
So awesome. So here's a question that just came up from Vuk here. He's asking, if this trend continues, will we see a healthy pullback in price, or is the Waterloo region sheltered? So, I'm going to comment on that. I'm going to say, I think where we are right now, when we look at the numbers, we have such low supply before even this started. And again, so the pandemic happened. We had low supply originally. Pandemic happened. Even more sellers are saying, hey, look, I don't want people to come through my house. less listings, as George just said, compared to last March. Okay, and we have more sales than listings, even though this has been going on. Even though it's a small sample size, it's only been a week or 10 days. So in my opinion, I think it's going to be quite okay, and I think it's going to be on fire when this is all settled and done. The sooner it finishes, the better it is, of course. If we're back to work in June, full effect, everything is fine. I think we'll be quite fine with the prices, and I think they're going to skyrocket with these low interest rates. I mean, everybody was quarantined at home. Everybody's sitting around, waiting, looking to buy their home, and now the opportunity with these low interest rates has so many more buyers to enter the market. Don't forget the institutional investors, right? The people who took out their money from the stock market, who just don't buy one door, they buy thousands of doors. And, that's going to really offset the drop in demand from the people there's a small amount of people that are going to lose their jobs. Again, just my opinion, and I'm talking about the short run. I mean, if this pandemic lasts for 18 months, I have no idea what's going to happen. But if it lasts for, 4, 6 weeks, 8 weeks, I think we're fine.
Yeah, even into the fall, I think. And the big thing to look at here is, even though the unemployment numbers look really big right now, a lot of people are expecting to go back to work. There's still going to be some people that, unfortunately lose their jobs or lose their businesses because they can't make it through this. But a big majority of people are planning on going back to work. So that demand is going to rebound. But, you're looking at the supply before coronavirus even hit, and it was already so low, it could have taken a big hit to the demand long term and not affected the prices too much. So
yeah. We have, our industry here is fantastic. I mean, look, we have 2 universities. We have a college that's the biggest college in Canada. It's a university. A lot of people are coming here to study, and then they stay here. And things they study for these days are, a lot of them are in the tech sector, right? They're remote jobs. They're jobs that you can work from home, and the technology has grown over the last 5 years, let alone last 2 years. So it allows for people to use technology to do their job, and in the industries that we have here locally, going from insurance to the tech startups to the big company Google that we have here locally, and I hope you understand what that means, right? It's not all manufacturing, although manufacturing is a big deal.
Yeah, exactly. And a big part of all of this is just how diverse our economy is. And I had a point to make now. It completely. Right. What I was going to say was, the more that everyone takes this seriously, the more that we follow the guidelines and precautions, and the more that we can mitigate this, the less of an effect it will have on the real estate market. Like Mario said, if this goes on for 18 months, well, then that's a totally different picture, because it changes how many people are probably going to be going back to work. It has this big chain effect. But if we can, get over the hump within the next less than 6 months, then I don't expect it to have too much of an effect in that situation. We also have a question here from Kamudi asking, how does it protect us as a buyer to purchase based on videos and photos only to find it's not up to the mark or the condition of the house once you actually go through it? Is there a clause that would protect the buyer? So a couple of different clauses that you could include in this scenario. If you are buying something sight unseen, you can put a condition in there saying that it's conditional on you walking through the house and it being satisfactory. So if you look at the virtual tour, the 360 tour, you look at the measurements and you feel, this really meets all my criteria, I would just have to check it out in person just to make sure it feels right, because it's always a little different when you're in person. You can put in a clause that states, this offer is conditional on a satisfactory walkthrough of the property. Another clause that can protect you would be a home inspection clause in a situation like this, which would both be a walkthrough of the property as well as having a home inspector double check it to make sure that everything is up to snuff. And then, of course, if you can narrow down a few properties that you really like based on the pictures and on the videos, and the sellers are comfortable having you come through knowing that you're very serious about the properties, that's also one option.
Another thing, look, this is going to be the great suggestions, George. But hey, look, if we can't get in there, like physically can't, then what we can ask is the seller's agent to go on a conference call like this with me, with your agent, George, or me, and you, and then we ask the agent to go through the house with the camera and show us everything. Like, from the mechanical room, from the furnace to the powder room, to the sink being operable, to the attic, to the windows opening and closing. I mean, that call can be an hour if you'd like, right? I mean, that's also a way to, get really into the details to see everything in detail versus just a virtual tour that, an artist put together, a photographer, and omitted the scratches in the hardwood floors, for example. So, we can ask for all those little details as well if we absolutely can get in there for that, walk through the home inspection, or that, to make sure it's up to par visually.
Yeah, and it's all going to depend from person to person. Everybody has different criteria that they're looking for. For example, someone who's buying an investment property doesn't really need to go visit the property as much as somebody who might be using it for personal use. So one more thing I wanted to share with you here. We've seen that demand has dropped. Last week we showed you the showing requests just drastically took a dive down. So we know the demand has dropped. So we want to see how supply has been affected. So right here what we're looking at is any properties in Kitchener-Waterloo that were listed in the first week of March 1st to March 7th. And you look up here, there's 203 matches. So we had 203 properties listed. We look at the following week, 8th to the 14th, kind of when there was some talking about coronavirus. We had another 206 properties listed. So about 200.
So hold on, George. What did you say, 206 properties listed?
Yeah, in the second week of March.
Okay.
And
so that's March, what is that, March 10th? No, March 9th?
8th to the 14th.
Okay.
And it was really after that weekend that things started to be talked about. Trudeau came out on Monday, the 16th, and started making announcements. So if we look at that week from the 15th to the 21st, that third week, we had 209 listings again. So that was 3 weeks in a row of steady listings about what you would expect. People were pretty positive. I don't think that they expected much to happen. And then there's last week, which was, when we started being told that we should only take on listings if they're really important, if they're serious. Real estate is essential, but it's not business as usual. And we're seeing a drop to 133 listings only. So what will be interesting is to see how this carries over into April, because really last week I would say was the first week where people really seriously started self-isolating and staying at home, and real estate agents started telling people, maybe it's not the safest to list right now unless you really have to. So going into April will be interesting to see what happens, but we've seen almost a 50% drop in listings. So a market which already had 50% less homes for sale than last year has dropped by another 50%.
And the interest rates have dropped.
Only for the people who already have the mortgages. And fixed rate has dropped as well, yeah.
So like all that combined together, like prices have to go that way. Well, like they have to go up.
You got some demand dropping too. So it depends. It depends on how much does the demand drop, but the demand has to go a long way down to catch up with the supply that's already so low to begin with. That was seen
to get into an equilibrium. Exactly. So just like we said, right? I mean, it all depends how long this takes.
Yeah, that's exactly right. That about covers it for the real estate market. We'll be back again. We'll be doing this on a weekly basis, and we'll be able to really track and see how the market's being affected. But that first chart that we looked at, which was showing average prices, it shows that prices in March still went up compared to February, and they went up quite a bit compared to March of 2019. So now let's see what April has in store for us.
Awesome. Thanks so much, George. Hey guys, please let us know if you have any other questions. Now we're into Q&A. If there's something else that's on your mind, write them down right now. Let's hear it. And George, you and I are just self-isolating, my friend, where we have some clients that we're working with right now. And it's tricky, right? I mean, it's tricky taking them to properties. Sellers don't want us in there. They want us to buy, with the, just with the virtual tours that are provided.
Mm-hmm.
Some sellers will let us in for, once they accept the offer, for a 10-minute walkthrough real quick.
Yeah.
It's just the times that we live in, right? I mean, hey, and then we're not allowed to be face-to-face with you guys. So when we do a showing with you guys, it's going to be pretty much, we come in a mask and gloves and we wave and we go up to the door. We open the door for you and we get out of the way. You get in there. We wait for you to finish your 10-minute walkthrough. And then we discuss, through a video call later or a phone call, your options and, your thoughts about the property. Times have changed, and that's the best we can do right now.
Well, and we're really lucky that this is happening at a time where we have so much technology that we can rely on to help us, from signing offers that don't have to be done in person, to meeting with people where you get to see them via video call, but you don't necessarily have to be in person with them. Like if this happened in 1995, I think it would have been a lot worse for the market than what it is right now. I don't think as many businesses would have been able to continue operating.
Right. Yeah, no, 100%. I mean, people are packing up, working from home and setting up their firewalls and everything and continuing business as usual.
Yeah, exactly. And that couldn't have happened. So, silver lining, we're lucky to have the technology that we have, which allows us to carry out our business.
That's it. Awesome. So in a nutshell, get approved. Don't just get pre-approved, and make sure everything is fine. Make sure you trust a partner source for your mortgage. Don't just talk to anybody. Get your clauses in there to protect yourself, and let's go shopping virtually.
Exactly. And even if you're not considering buying, you don't have to buy or sell right now, so you're going to wait for this coronavirus thing to pass. It's still a good idea to talk to your bank to know the things you need to do. Maybe there's some debt you need to pay off, or your mortgage broker. Give Leo a call. He'll let you know what you need to do to qualify for that amount that you're looking for once this all passes. Give Mario and I a call. We can set up a private video chat like this with you and talk to you, about your preferences, about the kind of properties, maybe even set you up on a search in advance, just so you can keep an eye on things coming up, so that once this is over, you have an idea of what properties are able to come on the market. And if you're a seller, we can get you to walk through your house with a camera, show us what you have, and give you some tips and pointers on how to get your home ready for sale once that time comes.
Awesome. That's great advice, George. I'm just going to add one more thing there. Even if you're a seller and you have, we can put you up on a search what's happening in your neighborhood. That way you can keep an eye on what's happening, what's been selling, and we have a in-house tool that you can just check out, put in your address, and you get a recent update on the value of your home based on recent sales comparable to your home in this local geographic area. So you get a full report, and that way you can always refresh this report and see what's coming and what's been selling, and keeping an eye out on your neighbors. So let us know if you have any questions with that. And otherwise, I wish everybody a great evening. I want to thank everybody for joining us, and I hope that you enjoyed what we had prepared and answered all your questions. We'll be here again, like George said, next Monday, 8 p.m., and we'll have a better idea on what's happening in the market.
Maybe Mario will have a bit of a better internet connection.
Maybe Mario will have a better internet connection.
Hey, thanks so much, guys. Remember, stay safe. Don't go out unless you need to go out. And let's all hunker down and get over this sooner rather than later. Thanks again, guys. Cheers.
Thank you. Take care.